Trump's trade war escalates, China's 75% tariff retaliation shakes global markets. The U.S. China trade war has taken a dramatic turn, marking one of the most critical moments in recent economic history. This escalating conflict, culminating in China's 75% tariff retaliation, has sent shockwaves through global markets and ignited fears of prolonged economic turmoil. In this video, we'll take a closer look at what's happening, why it matters, and where it could be headed. Let's dive in. Since taking office, U.S. President Donald Trump has frequently used tariffs as a weapon in international trade disputes. His administration's decision to impose a new 10% tariff on $300 billion worth of Chinese goods, effective February 1, 2025, represents a significant escalation. China hit back swiftly, raising tariffs on U.S. goods to a staggering 75%. This tit-for-tat approach has economic, political, and social implications worldwide. But what's behind Trump's aggressive trade policies? His administration has argued that these measures protect American jobs and industries while simultaneously reducing the country's trade deficit with China. However, critics highlight the risks of significant inflation, disrupted supply chains, and strained global partnerships. China's dominant role in the global supply chain makes it a challenging opponent. The nation leads in producing electric vehicles, batteries, and rare earth materials, resources vital for emerging technologies. By imposing these tariffs, the U.S. hopes to protect domestic industries against foreign competition, stimulate manufacturing at home, pressure Beijing into economic concessions. Trump's rhetoric has been bold: the tariffs will be very, very substantial if China doesn't cooperate. Despite these firm stances, many question whether the U.S. strategy might backfire. In response, China's counter-move wasn't just about matching the tariffs, it was strategically designed to cripple important U.S. industries. Beijing's retaliatory tariffs target pivotal American sectors while signaling its hold over essential resources, including rare earth elements and other critical materials vital for technology and defense. Electric vehicles and green energy: U.S. automakers like Tesla and Ford heavily rely on Chinese battery components. These increased tariffs may inflate electric vehicle prices, slowing progress toward renewable energy goals. Technology and semiconductors: semiconductor manufacturing depends on Chinese materials. A disruption here could cripple America's technology giants like Apple and Intel. Rare earth elements: China's dominance in the rare earth market gives it unmatched leverage. These elements are essential for products ranging from smartphones to advanced defense equipment. China's retaliation sends a chilling message: its dominance in essential industries will not be easily undermined. This economic confrontation comes with severe global consequences. Many fear that deepening the U.S.-China divide may permanently fracture global trade into two rival blocs. Some potential outcomes include inflationary pressures: with higher production costs transferred to consumers, prices on electronics, cars, and day-to-day essentials could rise significantly. Complex supply chains: multinational companies seeking to dodge tariffs might shift operations to emerging markets like India and Vietnam. While possible, this transition will take time and require significant investment. Slowed global growth: prolonged trade tensions could stifle investor confidence, reduce international trade volumes, and significantly impact developing global markets. Global trust in a mutually cooperative trade system is eroding as economic partnerships falter under escalating tensions. The current U.S. tariffs sit at 10% on key Chinese goods, but speculation surrounds the possibility of it reaching 20% or even 60%. Similarly, China's drastic 75% countermeasure indicates it is prepared for long-term economic resistance. This standoff has the potential to spiral into several scenarios. Negotiated settlement: both sides could opt for a partial trade agreement, similar to the Phase 1 deal achieved in 2019, to de-escalate tensions. Unrelenting escalation: a worst-case scenario could see both countries doubling down, leading to severe disruption in global markets. Global trade restructure: forced by uncertainties, businesses might gradually abandon operations in China, creating new hubs for global supply chains. However, a sustained trade war is expected to raise consumer costs, dampen investment, and jeopardize international economic stability. Some experts believe this trade war might usher in an irreversible split in global trade relations. With the U.S. and China hardening their positions, two parallel trade ecosystems could emerge. Western economies might start favoring partnerships with allies like Europe, while China could strengthen ties with emerging nations across Asia, Africa, and Latin America. A divided trade system could increase global inefficiencies, delay technological innovation, and amplify risks of resource shortages. Whether by design or conflict, the global economy is being reshaped in ways that may persist for decades. With both superpowers digging in their heels, the path forward is far from certain. While backdoor negotiations remain a possibility, mutual distrust makes meaningful compromise difficult. For now, the global economy faces volatile times ahead. Key questions moving forward. Will new rounds of talks or agreements emerge to reduce tensions? How will companies dependent on Chinese goods cope with rising tariffs and supply shortages? Could alternative economies like Vietnam and India seize the stage as global trade hubs? The U.S. China trade war has escalated to unprecedented levels, creating waves of uncertainty that stretch across continents. From price hikes to supply chain interruptions, the ripple effects are already being felt. With both nations steadfast in their objectives, finding a resolution appears increasingly difficult. The next chapter in this economic standoff depends on bold negotiation, calculated strategies, and perhaps a willingness to reconsider nationalistic priorities for the sake of global harmony. What do you think? Is this trade war heading toward resolution or only beginning to unfold? Share your thoughts in the comments below. Stay updated. Subscribe to our channel for in-depth analyses of global trade, economic trends, and geopolitical conflicts. Don't miss out on the updates shaping the future of our world.